What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, NVDA, and Meta. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly what critical levels to watch for breakouts and reversals. So let's go ahead and get started by first talking about SPY on the daily candles, where we can see that SPY last week came down to retest the 10 and the 20-day moving averages, but it managed to close above those two lines. Now, before we talk about the significance of these two lines, let's talk about some key events that happened last week and some things that are happening this week that could potentially send us up or down. First of all, earnings season kicked off last week with financial institutions such as JP Morgan, Citibank, and Wells Fargo all reporting and topping expectations, as well as boosting their forecasts. Banks are the backbone of our economy, so the fact that they're doing well is already a great start to earnings season. However, this week we jump into more prominent company earnings like Netflix, Tesla, and Goldman Sachs. Wall Street boosted corporate earnings expectations early this month, so analysts are already expecting strong numbers, and there is no better determinant of how market and company valuations are doing as earnings. So it's important that we pay close attention to how these companies are doing so we can see whether they're likely to go up in the next quarter or down. Now, as well as bank earnings, last week we also saw the preliminary reading of October's Consumer Sentiment Index. The last 3 months of the year are typically the strongest months of the year in terms of earnings and spending. However, the consumer sentiment reading came in at a 5-month low right around 63, which could explain why we sold off on Friday. Now we can see that Friday's sell-off on SPY came down to retest this blue line, which is the 10-day moving average. The significance of the 10 and the 20-day moving averages comes from the fact that when we broke below them back in September, we can see that SPY sold off, and every time it retested to break out back above, it continued selling off further. Now when we broke back above them, those lines automatically should turn into a support, and so far they are acting as a support point. The next resistance, if you're looking at moving averages, is going to be right around the 50 and the 100-day moving averages, which is the yellow line here and the gray line right here. So if you are a trader or an investor and you're looking at the daily candles, remember that institutional buyers, even Wall Street, looks at these lines to gauge whether the market is currently in an uptrend or in a downtrend. And the most important line here is going to be the 50-day moving average. And the second most important is going to be the 200-day moving average, where we saw this big reversal. This is a line that we have not retested since we broke back above it in March, and you can see that we rallied for months after. So coming into this week, the first thing you should be paying attention to every single day on the daily chart is, where did SPY open? Is it above these two lines? Is it below these lines? Or is it right in the middle? As long as it's trading in the middle between this 50-day and the 10 and the 20-day moving averages, there's going to be a lot of challenges to the top and the bottom, and we're likely not going to make much progress until we're finally above this line or we're below those lines. Now, earnings is going to be a huge determinant of where SPY goes next, because remember that technology stocks hold a very heavy weight in the markets. So as technology stocks report, this is likely going to be the cause of us propelling higher or selling off lower. Now, looking at SPY on the shorter term time frame, which are the hourly time frame, we can see that there's a strong resistance right around 438.60, also right around where the 50 and the 100-day moving averages are trading. So if SPY can break above those levels and this level, then we can see a continuation towards 444 to 445, which, if you are taking calls or if you are longing the stock, you can take profits right around this level. And if it breaks above this level, then it can continue going towards that 453 to 454 mark. Now, these price targets are extremely aggressive, so make sure you check back in next week, because we will be updating these price targets. To the downside, if you are looking at short or a put position, then you can take a short or a put position below 425.50, but we are not expecting the bears or the sellers to get really active unless we break back below 416.25. Below that point, we can sharply move towards 410, and we can see a level not seen in months. Below 410, things can get very ugly, and we can easily see 400. But again, we will be updating these price targets next week, so make sure you check back in. So now let's jump into the stocks that we're watching for the week ahead, starting with Apple, where we can see that Apple on the daily chart Just like SPY, it is trading in an awkward position just above the 50-day moving average, but just below the 100-day moving average. You can see this happening right in front of our eyes, where you can see that there's rejection at the top and rejection at the bottom. So right now, traders do not really know where to take Apple. So let's talk about it on a shorter term time frame and see what it tells us. First of all, Apple right now is trading in a position where it's neither long or short. Traders are still deciding where to take it. If it can break above 190, then Apple's buyers can take over. This is one of the strongest rejections that Apple saw in its recent history, so buyers want to be above that level to regain any confidence and to send Apple back towards that 200 level. To the downside, we do have a support right around 177.60 to start off the week, but the strongest support is going to be right around 172.75. If it breaks below that level, then a short or a put position can be taken towards 167, and below that level, we can see a further downside move towards 162 to 163. The next stock on our watches is going to be AMD, which closed just below its 50 and 10-day moving averages last week. So coming into this week, the first thing you want to pay attention to on the daily chart is if AMD can move back above this 50-day moving average, which is the yellow line on our chart. So if AMD can move above that level, then the upside price target is going to be right around 112. Above 112, the resistance breakout can take it towards 119 to 120. Again, this is a pretty significant resistance, a pretty significant price target, and a pretty aggressive one. So make sure you check back in next week because we will be updating that price target. To the downside, if AMD continues its downfall, it can break below 99, and a break below that level can take on a short or a put position, and it can take us towards 93 to 94. Below 93, it can move towards 89. The next stock on our watches is going to be Tesla, which is reporting earnings this week. Now, unfortunately, Tesla buyers could not keep the stock above the 10 and the 20-day moving averages last week, and they sold it off to close just above the 50 and the 100-day moving average, which means that going into this week, every day of the week, we should be looking at the daily chart to start off the day. If Tesla's daily candle opens below those levels at any point, then it could be at risk of selling off. Here are some levels to watch. As far as Tesla on the hourly time frame, the first resistance in focus is going to be 259.60. Above that level, Tesla can move back towards 268, and a breakout above 268.85 can send Tesla towards 276. These are pretty aggressive price targets, but remember, Tesla does report earnings this week, and it's very usual for Tesla to have a very big reaction on earnings. Now, whether that stock reaction is up or down, we don't really know, but these are the levels to watch. To the downside, if Tesla moves below 250, which is right around the 50-day moving average, that means Tesla can sell off towards 243.75, and below that level, things can get very ugly very quickly, and Tesla can sell off towards 234 to 235. The next stock on our watches is going to be NVDA. NVIDIA in this case also sold off on Friday, but it is one of the only stocks that is still trading above its 10, 20, and 50-day moving averages on the very short-term charts. So far, NVIDIA is currently one of the strongest stocks on the market. Here's some critical levels to watch on the shorter-term time frame. If you are bullish on the stock, you need to break back above 462 for the stock to rally towards 476. Above 476, we have a price target right around 486. So if you are longing or taking calls on the position, you can hold as long as NVIDIA holds in this green range. However, these are very aggressive price targets, so I wouldn't expect it to hit them this week. If anything, give yourself a few weeks or a few months on any call that you take. And if you are in shares, then just be patient with the shares as long as it's above 462. To the downside, NVIDIA has a support right around 438.80. If it breaks below that level, it can sell off towards 429. Again, very aggressive price targets that we will be updating in next week's video. The last and final stock on our watch is going to be Meta. Meta, like NVIDIA, is trading above its 10, 20, 50-day moving averages. In fact, Meta hit a new 52-week high last week, something that only Meta and Google have done recently. So very impressive moves from Meta and Google. Here are some critical levels to watch for Meta. Of course, apart from the 10 and the 20-day moving averages. So just like we're doing here, the first thing we look at is the daily candles. This is what you should be doing at the beginning of every day because there's nothing that indicates better than the longer term time frames. Here in this case, the daily chart. Meta on the shorter term time frames has levels right around 410.50. So if you're looking for a support, the first one is going to be 310.50. Below that is around 307. Buyers really wanted to see hold that green range because above that range means it is holding the breakout from this consolidation range. Meta spent weeks in this consolidation, so the last thing that buyers wanted to see is move back into this consolidation because then they're likely to give up their positions and move it further. So as long as it's in this green range, Meta is doing well. The next resistance here in this case is going to be 325. There's not many resistances right around these levels because this was such a sharp downside move on Friday. Meta barely bounced, so it barely created any resistance points anywhere below 325. So you need Meta to break back above 325 for it to move to retest at 330.60, which is also its 52-week high. Below 307, Meta can free fall towards 296, but bears won't take fully over until it breaks below 296.75. Below that point, the price target is going to be right around 286 to 287. Again, these are aggressive price targets that we will be updating in next week's video. So I hope you found this video helpful. Thank you so much for checking in and best of luck trading.